Hi everyone, thank you so much for joining on time. Let's wait for a couple of minutes for others to join and then we can start. Hi everyone. Hi everyone, 2 more minutes. Let's start. Before we start, I think some of the people who have already joined, I can see your names and some of the experienced traders have joined. Also, we can see that as students, they're in the list. regular meetings with our team. But before we start proceeding further, some of you, if you are experienced and some of you have got a good grasp on the market, then don't confuse the entry models. What we are going to discuss today is pretty simple with respect to these two entry models. This is the buying entry model, which we are going to discuss. And also this is the selling entry model, which we are going to discuss. It has its own uniqueness, but at the same time, it has also its own weaknesses because we'll be trading counter trends or structural shifts rather than following the trend continuation patterns. So this is a counter trend model, and you can also use it in the textbook scenarios. But at the same time, if you're able to find out a good setup on the longer time frames, then within the structure you will be able to trade much more shorter time frame. Let's say if you are able to identify one setup like this on a weekly candle, that will be more than enough for you to trade for couple of weeks, which is roughly 12 to 13 weeks. You will be able to trade with this particular trend, and you can even trade 4 hours, 1 hour and 15 minutes. Usually what I do is, whenever I post the morning missive, you might have observed, uh, I look for the longer term opportunities in the 20-day candle as well as weekly candle and the daily candle, followed by 4 hours, 1 hour, and 15 minutes. So these entry models, both buy side entry models and sell side entry models, if it is working out, then on a 20-day structure, if we get an opportunity like this, I'll be able to show you some of the examples which I have already worked out. And from there, we will take it from very basic, how we are going to identify these liquidity points. And we are going to discuss very simple components like liquidity and imbalances. All right. So end of the 5 weeks, some of you, if you're completely starting new, I want you to have an edge in the market with respect to managing. At least if you take 100 trades with a 1:3 RR, you should be able to hit minimum 40 to 60% win ratio, but you can add much more confluences here. So this is just a 7-piece puzzle, but you can add much more confluences for fine tuning your entry models, and then from there take it forward. So I hope the agenda for 5 weeks is set so far. Anyone has any questions, any doubts, any clarifications with respect to what we are going to learn, please feel free to ask. And before we proceed further, I would like all of you to introduce yourself. Just say 2 words. How long have you been trading the markets? And what is the entry models or entry setups which you use at the moment? I'll start with Arjun. Hi, Arjun. Any others would like to come forward and just explain yourself or introduce yourself, what you do, how you do, and how long have you been trading the markets?
Hello.
Hello?
Hi, Sinu. This is Naga here. Can you hear me?
Yes, loud and clear. Please go on.
Yeah, thank you. So my way of trading is I look at the weekly candles. So if
Mm-hmm.
I get the TJIF setup, then only I take the trades in the market.
Okay. How long have you been trading, Nagarjun?
It's been like 1 year.
Okay, okay.
Yeah.
All right. No, no worries. Shivam, yes, go on, Shivam.
Yeah, hi Shinu,
Yeah.
Shivam on this side. So I am trading based on that market structure and volume. So it's been 3+ years of experience. So
Okay.
I am doing quite good. Yes.
Okay. So you should be able to, teach us what is working for you in the on the go. So I want the sessions to be interactive as much as possible. I don't want to have a one-way communication, but going forward, we can all share, the best possible things which is working now. And I'll also come back to all of your questions or doubts if you have any. I can see Titsi saying, I'm fairly new, started trading last year. No worries. There is nothing new, old here. I thought of starting with candlestick additions and candlestick, you know, uh, psychology thinking. How many of you have thorough with candlestick addition? Let's start with candlestick addition beginning. Have you ever tried adding candles together and then, looking at the psychology of the candles?
So you
Have
mean
you?
to say candle continuation theory kind of thing?
I'm not sure what is the right word for it, apart from this, this is the basic simple word, which is candlestick addition, which we are talking about.
So you mean to say patterns,
Okay,
candlestick patterns kind of?
let me. Oh, this is one of my stop loss hit trade today. But anyways, that's a part and parcel of the game. All right. So if I want to do a candlestick addition on a daily candle, which means like if I do an addition on these two candles, what would be the outcome of these two candles? Have you ever tried using that?
Um, I think I'm not sure, but I will try to explain it here. So I will be waiting for today's
Mm-hmm.
candle close. So when I
Mm-hmm.
see it on the Monday, so what I will be doing is like I will be adding a fib to the today's candle, and if I get
Mm-hmm.
something in between the golden range, I'll be waiting for a candlestick pattern or change of character in the 5 minutes. So then I will be taking a trade from there.
Okay, all right. No problem. So let's say, for example, if we add these four candles together, first, second, third, and fourth, what would be the psychology of this entire move? Because once you are able to identify this candlestick addition, it will be much more better for you to go upgrade yourself with respect to the order flow. And you will be able to fine tune and pinpoint the entries with respect to order flow for some of you if you are looking for scalping. So before we go into the advanced version, I want all of you to understand what happens if you add first, second, and third and fourth candles. Let me start with drawing a simple, psychology among these four candles in 15 minutes. So the candle started with here at 4,496, and the sellers have tried pushing the market down, right? After having an indecision candle, and then from this point onwards, where buyers started pushing, and they tend to push the market until here, and some of them have booked their profits. Then the very next candle have started from this point and buyers continued to have the push. Now, even after having this push, the third candle, even though buyers tried to push the market, but they fail, which means anyone who have bought at this particular area, let's say at the moment we can call this candle like this. Right? But anyone who has bought from this area would have been trapped here, which means you can also see it on the order flow, 15 minutes if you go. Look at this trap. So people who bought here, let's say 15 lots of gold at 4,526, 7 lots, 4 lots. 4 lots again, 5 lots. All the people who have bought at this particular zone now facing a huge loss, or at least their psychology is in trouble. So the first agenda of this 5 weeks is make sure that at least you guys don't buy here, or at least you guys don't, you can try for sell opportunities here, because that would be, very, very minimal risk, and at least a 1:3 reward you'll get. But I'm not saying that you should sell when the rising market goes, or I'm not saying that when the market is falling, you should try to catch the falling knife. No. What I'm trying to say is, if you are able to understand the psychology behind this simple candlestick analogy, then once you go move forward with respect to whatever you trade, or whatever the tools you use, or whatever moving averages, RSI, or Bollinger Band, or even let's say if you use stock axis, or SMC, ICT, or turtle soup, any strategy comes with a basic question of who is in control. Now, I want all of you to answer this particular R. Let's say 4 candles you have added. Now, I want all of you to answer who is in control at this moment.
Sellers.
Okay. Any other answers? Could you please type down in the chat? Gautam says buyers. Okay. Buyers or sellers? Buyers, FVG. Sellers. Okay. Shivani, sellers. Okay. Buyers, as we are in the phase 2 pullback of an uptrend. Okay. Now, I have got both the answers. Now let us go back to actual, pit. Let's say if you are in a pit, you will be able to understand trading pit. You will be able to understand that last 15 minutes or last each candle, how you were able to understand whether who's in control. Let me zoom out to last 4 15 minutes candles, which is from this point onwards, right? At 3 o'clock, sorry, 3:15 onwards. Let's go and read out who is in control. So are you able to see the screen, which the order flow, step by step, which we are explaining? Let's say in total, we had around 7.07K volume inside that particular 15 minutes candle, which means within this particular candle, so this is actually a spot chart. Let me explain to you future to future so that it will be much more easy for you to understand. So within this particular candle alone, which is like 315 to 330 candle, we had around 7K total volume. All right. When the market opened here, initially, after you can see this could be this could be the liquidity. And after this liquidity, when the market opened at this stage, which is like taking out the liquidity and try to push down, or even starting from this particular area, what we can see is 29 lot, 23 lots, or 34 lots, or 35 lots of sellers initiated the positions. And eventually, we have lot of sellers who tried to push the market down. And you can also see we can slowly started with the buyers. Buyers were not pushing the market up, and 9 lots and 20 lots and on an average. But net deltas, which means if you add 3.73 minus 3.34 volume, which is sellers volume and buyers volume, you will get the net delta, which means 395 lots only actual buyers were there. So here itself, the question for, you know, who's in control with respect to this four candles, the first candle, only 395 people were in control with respect to buyers, which we don't understand in a normal, view. When you see a particular candle, what we think is, okay, this is a bullish candle, right? But actually, what is happening with respect to the market? The market is trading, but we do have a 7K volume, but only 395 buyers were there. And if you go for the next 15 minutes candle, let me try to explain the second one. All right. On even the second candle, you'll be able to see the volume got reduced, which means the institutions are slightly slowing down. And we have got 2.48K sellers, and buyers showed even much more strength, like a 748 comparative to last, um, you know, um, 7K volume 700, but here 5K volume again 700. I have a couple of questions. Just finished a week session. Oh, sit. No problem. That's completely fine. So we do have this 4 o'clock sessions. Anyways, I'll have a word with Avik and I'll make sure that you guys are having some time to join before the session.
Yeah, because today is too busy. The just now finished the other session. That's it.
Okay, no problem, Ajmal. Thank you so much for letting me know. I was not aware that. I was thinking like, why some of the students are not joining. Anyways, thank you so much. I'll make sure that Avik is scheduling his sessions on Friday, anything before 3:30. If he is winding up by 3:30, then at least you will have a 30 minutes window to, grasp everything you have learned and you can
Yeah,
get
yeah,
it.
yeah. Because today what happened is a night shift. I go to the work, so it's
Okay.
just too busy that today.
No problem,
Mm,
brother. I'll make sure that next week onwards,
okay.
you will have enough time for you to join the session as well. Our
Yeah.
timing is 4 to 5, so even 4:10, 4:05-ish, 4:10-ish, we'll be starting. Okay, 5-10
Yeah.
minutes. We will review all the things we have learned because it's a first day. We just discussed that. Okay, so let me come back to the topic again and okay. Here, the volume got reduced and 7.748 is the net buyers. Imagine from a 7K volume and 5K volume, now the 3K volume has changed. Inside 3K volume, you're able to see that, okay, now the buyers have completely stepped back, which means the entire buyers who tried to push from this area, at least this area, and this particular area got trapped, and which is the next liquidity these people would be hunting. Any areas? So if you have bought here, instead of answering which liquidity would be hunting, I'm asking a simple question. Imagine if somehow you bought an entry from here, where would you keep your stop loss? At 4,500, if you have bought your entry, where will you keep your stop loss? I
I
need
I
some numbers.
I put in the candles, the same candle low. That means
This
in
one?
yeah, yeah, if I buy from the candle, the candle low, lower low, I put in the stop loss. If I do like that, if it in 30
Okay.
now you're trading chart in 15 minutes. So if I
Yeah.
buy in the middle of the candle, the same candle I put in the lower low in stop loss. So after
Okay. Which
the
means
after the going to uptrend, I put in the trigger the stop loss. Like like
most of the people would keep same like Ajmal have said, 4,493 would be their first stop loss. Some people might keep 4,479 as well, right? This is the swing low, and most people would keep the stop loss. So these people, we have time has to tell. And in another 45 minutes, I won't be surprised if the market is trying to push and take out all the buyers who have entered lately. So this entire zone, if you consider it on a 4 hours, we have 1 hour 33 minutes, which makes a decision after sweeping this liquidity whether the buyers are in control or sellers are in control. So what sellers are trying to do now, I want you to compare with 15 minutes to directly 4 hours. You can do it either 1 hour, you can do it 30 minutes, you can also do it 15 minutes. But the whole concept is, if you're able to do candlestick addition, then two things will happen. You will start avoiding the pitfalls most of the common retail traders do. Okay. So the pitfall is either entering early or entering late, or when both of the buyers or sellers are going to get trapped like this. Let's say, for example, those who have bought it here at this particular area would have been still thinking or hoping that, okay, market is trading at all-time high, it will come back and hit new higher highs at least for 15-20 minutes. And what will happen, they will try to close the position until these stop losses would have been hunt. You can also see that sellers have actually tried accumulating their orders from this area onwards. So they put the iceberg orders, right? They put slicing orders, they put iceberg orders. You can also see there is a solid sell side imbalance here, which is from the previous zone, which is this zone. Yeah. Roughly, let me take. This is very few sellers, but that entire candle have got, let me just try to explain that. So this is the most volume traded area today. Just give me a sec. Sorry, guys. So this is the most volume traded area. Until the price comes back to this particular zone, I'll be still waiting who's in control. So answering your questions, so many of people have said buyers are in control. Now let's go back to the third candle. We have seen first, second, 7K, 5K and 3K volume, and delta was 700. This was again 700. This was minus 400. And all of a sudden, let's see how many sellers have initiated their position at this area. And the smart people, after watching these three candles, what they would have done, at least place their orders here, keeping a 1 tick, 2 tick stop losses. Let's say you can try to capture, if you have placed a sell orders here or even sell orders right below the closure and keep a stop loss right above this particular candle, your stop loss would be somewhere here, entry would be somewhere here. Sorry. Entry would be somewhere here, and you would keep, this is a scalping trade which I'm talking about, 3 to 5 points, and try to target at least 1:2. So high frequency scalpings, if somebody is doing, which has got hit in 10 to 15 minutes itself. So now why I'm telling at least 15 minutes trades and try to do 1:2, you'll be able to find out. We will discuss what is the time zone which we are trying to do these entry models based on whatever we have discussed. And look at this volume. Let's go back and see how many traders are trading at this particular candle. Now 3.53 K total volume is traded, and even though buyers are still buying only 234, which means buyers are again regaining the strength. As somebody has mentioned, this is just a pullback trade. Even we can see there is a buy side imbalance, which is 22 lots, 23, 24, 25. So we have a buy side imbalance here. So this imbalance, which has caused the entire move pushing upside, this is what's stopping right now. Imagine these buyers, if they step away or if they just close the position in a break even, and sellers will start triggering the entire push because the entire move was here, and then we can go back. Okay, so you can do bottom up approach or you can do top down approach as well. If you do bottom up, you will be able to see that, okay, 30 minutes, what market is doing, market have created a change in state of delivery, and this is how ICT is formed. You can call, okay, now people will be looking at, okay, there is a change in state of delivery, and this ICT traders or SMC traders, they call it as an order block, sell side imbalance and order block, which is an engulfing pattern, and then followed by market is trying to support here or resist here. If it is resisting, then what will happen? It will try to push back and come back to this zone again and try to take out this liquidity. So this is what the entry models for the ICT traders will do. But if you you know look for what happens with respect to, let's say, whether you are going to learn CRT concept, what CRT does like a liquidity sweep and closing below this candle, which means in a 30 minutes the turtle soup is happening here, and on a 4 hours we have 1 hour 30 more minutes for this to be a true turtle soup and this to be a true order block, which is the sell side imbalance within this entire order block. I know some of the words for completely newbies, it will be new for you. I'll send this recorded videos. Make sure you can pause and listen to all these terminologies once again, and make sure that at least you have a 2 minutes read so that it will be much more easy for you to have a Saturday and Sunday as a learning session. So we have discussed about, if you want, please make a note, change in state of delivery, which is CISD. Also, we have discussed about turtle soup. We have discussed about ICT order blocks. We have discussed about inverse fair value gap. And we have also discussed about, let's say, liquidity sweeps. Earlier, 5 years down the line, Junaid, I'll come back. I need recording. Sure, I'll share the recorded video. So don't worry, guys. If you are completely new, and earlier 5 years before, nobody was knowing about what is liquidity sweep or what is let's say turtle soup, or what is the accumulation, manipulation, or distribution models. Only Wyckoff's theory was, or even the box strategy, which is put it in a new word as a turtle soup right now. But everyone will move towards order flow, whether you are moving soon or later. You will be moving towards order flow and try to understand the market with respect to excuse me, the step by step entries and step by step sellers who are entering, and but the basic concept remains same. So if you have any questions with respect to what is basic candlestick addition and who's in control, answering this question, at this point in time sellers are in control. Why I'm telling sellers are in control? Because the market tried to push from here. Buyers, even though they tried to push the market upside, the sellers regained the control from this point onwards. That's why they were able to close the price below at least a 50%. If you range, okay, now FIB traders, what they do, they measure this range. When they measure this range, at least 50%. That's why the entire range is having a 50%, which means this is the POI for the FIB traders. Also, if you put on a upside down, let's say if you're looking for sell side point of interest, these topics we will discuss in our second or third sessions. So don't worry about that. So these are the two entry models. Price might. So this one we have discussed about, the buy side imbalance zone. And this is our candle. This is, you see, right? Buy side imbalance. So these are the two POIs. Price is taking a decision who is in control. For anyone who's not a scalper, who's looking for a positional trade, will be waiting for these two levels to mitigate and provide a supply or demand either below or above the stop, these ranges. Then at least you will have a 40 minutes to 2 hours trade, which you can at least enter now, which is not on a Friday, but usually if you find a setup like this, wherever the market is sustaining or rejecting. And from there, we'll be able to take next trade and move on with at least 1:3 or 1:2. So those who have answered here, buyers are in control. With respect to this candle closing, so the previous candle we have discussed about at this area, first candle, second candle, third candle, and fourth candle. Now we will discuss about even the fifth candle, including the fifth candle who's in control. Now sellers are in control. Sixth candle, buyers are trying to push the price up. Okay. Now, if the price is able to reach at this level in next 6 minutes, I won't be surprised. But if the price is not able to sustain, so we have drawn a fib level, right? This is the POI, point of interest for next sellers to push the price towards next liquidity, might be this zone or even followed by this imbalance. We have an imbalance here. So let me just. This is an imbalance, also an imbalance with a liquidity point aligning with imbalance. That is, some what we can call it a puzzle added together for more confluences so that we can analyze the market. Okay, this might be the target. I'm not saying this, thinking from a probabilistic view, this might be the target for the sellers. If the price is rejecting from this area, then if you can anticipate or if you can understand from very simple logic, this is the entry, this is the stop loss, this is the target. You have got a 11-point stop and a 30-point target, which is roughly 1:3. And I'm just trying to explain within Candlestick Addition itself, you can add layer by layer. Again, okay, who's in control? The only question you are asking yourself is who is in control at this moment? Not 10 minutes before, not 10 minutes later. If you're looking for 15 minutes candle, then who's in control for the 15 minutes candle? What could be the possibility for the next 15, 30, 45, and 1 hour? If you're able to identify or spot, there is a low risk probability, then there is a trade. You don't have to know so many, things about the market in order to analyze the risk, because only the controllable factor which we have in front of us is risk. If you know how to spot a risk, low risk probable setups, then you will be able to, do much more trades and you will be able to come up with large win rates but only one challenge with this entry model, what we are talking right now is you should be able to accept the loss. If you're wrong, done, move on to the next trade. You just have to erase the slate and then move on to the next trade, thinking that okay, that trade is completely over, and then excuse me. Oh, sorry guys. So that trade is completely over, and I'm moving forward with respect to next trade, analyzing the next chart. So we'll see a couple of examples about candlestick addition. I had a presentation for you guys, but somehow that PPT is not opening. Let me have a quick look if it is working again. No. Bad luck. I'll try for the next meeting if I'm able to share that presentation. But those who have joined late, I'm going to explain it one more time, what we are going to learn by end of this 5 weeks. A simple entry model where we have a liquidity structure, imbalance, internal liquidity, and entry model at least supporting with respect to having a 1:3 RR for a buy entry model and for a sell entry model. In that topic, today we have discussed a simple component, candlestick addition. Also, we'll be able to discuss much more in detail in the next session. But if you have any questions, any doubts, please feel free to ask any questions, because once you're able to do candlestick addition, then the best part is what we are going to do. We are going to analyze candlestick additions in 4 hours. We are going to analyze the candlestick additions in 1 hour. We are going to identify candlestick additions in 15 minutes. That is the additions which you are going to do. Once you're able to do these 3 analysis, then we are going to, you can make a note from morning 5:30 a.m. to 6:30 a.m. If you want to type down the, timings, you can also make a note. So it's 5:30 a.m. to 6:30 a.m. GMT, which is like a new 4-hour candle opening time. So you can consider, if you are joining from India or any other locations, please consider 30 minutes before and 30 minutes later to the 4-hour candle opening time, you will be doing this analysis. Pretty simple, candlestick addition. You will be adding on 4 hours. Okay, what is my previous 4-hour candle? I think we're about to reach at 6 o'clock. So 6 o'clock, 1 hour 15 minutes, we will be having one more candle. So we will be trying to do candlestick additions here. Okay, the first candle, second candle, and the third candle. This entire range, which is trading today, has a bullish sentiment. And with respect to daily, we have seen, with respect to weekly, if the price is able to close. So this is the 50% which we were talking about the early morning when I posted 4,420. This is the 50% of the structure. Also the previous liquidity with respect to gold. If the market is closing today, anything above 4,420, then from the next week onwards, I'll be looking for opportunities where the buyers are trying to push down, sorry, sellers are trying to push down, but the buyers are accumulating. That will be the plan of action for the next week. And if the price is not able to close anything below 4,420, then I'll be looking for sell on rise model. So that's how we plan for the next week closures based on current week by doing just candlestick addition. So what is candlestick addition? Let me explain it in a simple term. Let's assume you have a first candle like this, and you have a second candle like this, and you have a third candle, maybe something like this.
Yeah, I'm not showing the screen.
Sorry?
I think they're not showing the screen.
Oh, really? I was trying to explain the same things. Are you able to see everyone else? Are you able to see the screen?
Yeah.
Yes,
It's
yeah.
okay.
I'm
No
sorry.
problem.
Maybe it's my view problem. Sorry.
Please have a look. I'll share the recordings anyways.
Thank you. Sorry.
Yeah. So when we have three candles like this, what do you guys will be doing? You will be adding the first candle's opening price, and then you will push the price until the wick, and then you will close at the third candle closing price, and you can add the remaining wicks, and then you will be calling this as a candlestick addition. When people are going for strategies to strategy, when you are able to do the candlestick addition, one thing you will be able to tell yourself or answer yourself, the question you should ask is, who is in control? Now, can I have an answer for this particular candle? Buyers or sellers? Those who are saying buyers, please type down B. Those who are saying sellers, please type down S. I think those who have said sell, if you can come forward and ask any, even if it's a simple small doubt, feel free to ask. Why are you saying here the sellers are in control? So previous example, sellers was in control, but this example, this is buy side, right? Price is pushing upside. Tetsi, SA Ruth, Gautam, Victoria, Noor, Gundare.
Sorry, I thought the candlestick was going down.
Oset, okay.
Yeah. The fourth candlestick, I thought that was going down.
No, this is
Oh,
this is the addition. So if you add the first candle and second candle and third candle, so this is
yeah.
the addition of these candles.
Yeah, so does that mean the candle is going down?
No, the price is going up only, right? Price has opened from here.
Yeah, but the wick is higher, is like longer than the bar, like the thicker one. Does that mean the sellers are kind of overpowering the buyers?
Okay, let's try to explain this in a simple term. Even if you measure this particular candle, so this is actually 100%, and this is the area 50%, and at least 50% below, if the wick is more, then you can call it sellers are in control. But if the candle is actually 50% and above, then that is considered buyers are in control. This is not a strong bullish candle like this, but this has to be considered as bullish candle.
Okay, thank you.
All right. Any other questions with respect to candlestick additions?
Just a quick one, Sino. How did you come up with 100% margin?
Okay, so this is not a margin. You might have to go to the fib tool, which you have. And inside my fib tool, what I have done, so I've just given these values. You can, if you want, you can take a screenshot, everyone, or I can post it on the group. Better option would be screenshot. I can turn off my video as well so that you can take a good neat screenshot, which is I've kept 0, I've kept 0.5, which is 50%, and 0.618, 0.786, 0. 0.71 and 0.88. The one is the 100%. There are multiple, fib levels, but for this particular strategy, which we have discussed earlier, this is the most fib which is working and which has been backtested as well. All right. So this is basically
Is this the
Victoria.
weekly bar? Sorry.
Which one? This one.
Yeah, yes. Is it a weekly prediction?
No. It's not a weekly prediction. Don't take it as a weekly prediction. We were discussing about just candlestick addition as a concept.
All right. Okay. So this concept is can we apply this concept for every bus? Like even if it's 5 minutes, 1 hour, 4 hours, doesn't matter, is it?
Okay, so answering your question, you should be able to analyze the chart if you take out the name and the price. The 1 minute chart also looks the same, and 5 minute charts also looks the same. Let's say if you go to 1 minute, if I take out this 1 minute chart timing, then you should be able to tell that okay, whatever works in 1 minute, it works in 5 minutes, in 15 minutes and 30 minutes. It's only fractal. So if you are able to understand the basic concepts with respect to longer time frame, ideally you should go for longer time frame and try to understand the concepts and then come for the shorter time frame.
All right. I have a small doubt in Shin.
Yeah, go on, please.
The basically which time frame you using the footprint chart? I using the 30 minutes chart in it's okay because which time frame is a better?
Okay, so answering your question, which is the better time frame, what is your purpose? Are you trying to scalp or are you
Yeah,
trying to hold?
yeah. I using the scalping trading and using the 30 minutes chart and everything. So I when I the breakout in 13 minutes, so I check the volume and in how much the delta volume or how much the cumulative delta volume. So it's continuation or not. So then will be I go for the buy or sell.
Okay,
So what
if I were in your situation, what I would do reversely, let's say, what is my holding period? Let's say, have you holded a trade for at least 5 times more than what the charts you are looking forward? Let's say if you're looking for 30 minutes chart, then you should hold that trade at least 2 or 30 minutes.
Okay, so you said that in the last 2 hour, 30 minutes chart, I just give the analysis. Then after that, I need to trade, right?
No. So when as a trader, what we do tend to do wrong is basically, let's say we just try to assume the fact that we are good scalpers. And I'm not saying Ajmal, you are not, but I'm just saying generally we tend to assume I'm doing scalping and I try to close the positions within 5 minutes or 10 minutes. But you might be really great at positional trading. That trade might mature enough in, let's say, 30 minutes or a 40 minutes or a 1 hour or a 2 hour. What you should do is if you are watching charts in 30 minutes and taking entries down the line, let's say if you're looking at 30 minutes as your highest bar and 15 minutes as your second bar and 5 minutes as your third bar and 1 minute as your entry model, then that's fine. But if you're actually entering itself on a 30 minutes, then what you should do, at least try to hold that position. uh, if it is a loss, let
No,
it
no,
go in 30 minutes.
it's in my that the trade is not losing, but the win ratio is very good, but the holding period is very less. So the what I'm facing is the footprint chart in little bit tension about the to the volume down like that's I'm facing. So what I'm doing is I holding for the 30 minutes I buy for the everything 30 minutes, holding for the 30 minutes. If I go for the any good volume, I try to the stop loss. Like that I'm doing like. So this is I'm doing the trade.
Let me try to explain that in a simple term. Let's say, let me try to understand your question in a much more better way. So what you're doing is you're looking at a chart on a 30 minutes on footprint, right? Or do you want me to share your screen so that you can explain it in a much better way? Sorry, if you are talking, sorry, you're on a mute.
Sorry.
So
So
I
the
was thinking that yes, you were talking.
yeah.
All right, go on.
So whenever it's a buy or anything is coming, just I goes checking the to volume is coming or not. So I just buy whenever I'm buying from here, I'm putting the stop loss in the lower low. So after that, I put in the target. I just in the maybe the IB high or something. I just put in the target. So maximum I hold in 30 minutes. So my strategy is in 30 minutes. So I hold for the 30 minutes itself. So after that, the next 30 minutes, I just check in whether it's hold or not. Like that, I'm doing like.
No,
Huh?
there
You
there are a
understand?
couple of things, the couple of things which you need to make sure that you are filtering down by at least if your holding period, maximum holding period is 30 minutes, then what you should be doing is you should look at candles at 5 minutes or 1 minute time frame and then scalp it so that you will get fine-tuned entries. What you might miss here, if you are entering in 30 minutes, then that trade, in order to mature or even
Okay.
give a small pullback, your stop loss might get hit.
Yeah. 1 minute. I'll show you one more thing. Uh, this is my ledger account in a TradeZilla. So I'm using the assumption. So this has happened to my trade. You see the can you see here?
Yeah.
So this is my ledger account for in all the accounts. In the win ratio is very good. But you see the consistency also good, but the drawdown, it's the it's very low. That is I'm facing the issue. The profit is the last month. What I'm facing is the profit. It's going coming, but what I'm facing is this. I can't hold into the too much. You know, the holding power is very less. That's I'm facing the issue.
See, Ajmal, I completely understand that there needs to be some of the things which needs to fine tune, but at this moment, I'm not sure the entire strategy which you are using, and I can see there are a
Okay.
lot of things, like the chart is so full, but I'll try to find a time where we can discuss in person and then take things forward from there.
Yeah. Just tell to you. This is I'm doing
No problem.
only I'm doing in a 30 minutes candlestick breakout because
Mm-hmm.
not in I had a too many strategy, but I didn't do anything to more because the to one strategy and to pushing good.
No problem. Others, thank you so much for the 1 hour. And as we discussed, so the decision point is still trading for anything to give a breakout or breakdown. But if you go back in time, as I said, on a smaller time frame, this is actually the area, the buy side imbalance, and where the buyers are trying to push the price again. We need to see whether the market is rejecting from this area. We can also see there is a sell side in a smaller time frame. If you look at this entry model, what we have discussed now, we need to have a break of structure. We have a structure here, and the structure have broken, and within that structure you need to find out an imbalance. So this is 1 minute, you'll be able to find out these kind of entries. So this is the sell side imbalance here. When the price is reaching at this zone, what we are looking is, so this is the entry model. I think it's good, at least we have got one sample to share. So we have a liquidity, and the structure have got grabbed the liquidity, and we have a internal structure. The structure has broken, and it also provided within an internal liquidity. Let's see if we have an internal liquidity here. Yes, we have an internal liquidity, and then price tried to push upside within the sell side imbalance, which has formed within that area. So your stop loss would be as small as this, and your target would be, you can even target the first target as this zone. For a 2 pips stop loss, you're able to hit 10 pips. You can also even target 31 pips for a 2 pips, which is, what I'm trying to explain is, if you're able to do this, I'm not trying to explain and say that you should be start trading within 1 minute. What I'm trying to say is, if you're able to identify this in a 4 hour, then this is more than enough for you to trade for the next at least 13 to 14 days. Why I'm saying this? You might have seen a post which I posted on yeah, on a FTSE. This entry which I posted on, let's say, December 7th, and this trade to mature on from 4 hours, it took more than, let's say, 6th January, a month time. So imagine if you're able to identify this on a 4-hour structure. Sorry. Yeah. Yeah. If you're able to identify something like a 4-hour structure, every day you will be able to come back and buy on dips, buy on dips, and buy on dips. This is the opportunity, you'll be able to find it. So make sure you do all the things which we are going to discuss right now before you come back to the next session. The first one is, whatever the words which we have discussed, change in state of delivery, and the order blocks, imbalances. Also, we have discussed about liquidity sweeps. And most importantly, go and search on YouTube or whatever the free resources, you will be able to find some basic, 10 years back videos about candlestick addition. Go back and find out what is candlestick addition, and that is going to be your base foundation. Okay, so thank you so much everyone for joining and listening to the session. Looking forward and wish you nothing less than success ahead, and happy weekend. Take care, guys. Bye-bye.
Thank you.
Bye. Thanks.
Bye. Thank you.
Sinu, please send the video recording, please. Thank you.
Yeah, sure, I'll send it on both WhatsApp and Telegram.